XRP FAM, you cannot miss this critical news. JP Morgan, the largest bank on the planet, just crossed a line that changes everything. They finally said it out loud. Customers will soon be able to buy crypto assets directly through their accounts. Let that sink in. For years, every major institution swore this moment would never happen. They called crypto a threat, a fad, a risk. But the truth is, what they called a threat, they were secretly preparing to control. What we're watching right now isn't banks rejecting crypto. It's the banks becoming the crypto rails themselves. Strap in, because over the next 60 seconds, I'm going to connect dots most people still haven't noticed. Behind the headlines about Bitcoin, ETFs, and custody, there's a silent structure forming that ties together JP Morgan, Morgan Stanley, the CME, and Ripple. And by the time this structure is fully visible, it'll be too late to reposition. Just a quick side note, make sure you like and subscribe so you don't miss the next major update, and so that you are always informed with the latest news. This is not financial advice. Always do your own research and talk to a qualified professional before making financial decisions. A few days ago, a JP Morgan executive was asked about digital asset custody. His answer sounded harmless until you listened closely. He said, "We're already preparing for trading. Custody isn't on the table yet, but naturally we need custodians. We're exploring what the right partners would be for us." That one line was the quiet announcement that the system is already being built. Because when you follow those breadcrumbs, the path leads directly to Coinbase, the same Coinbase that Chase partnered with in 2025 to allow customers to use their ATM cards to buy crypto directly through the exchange. That single partnership was the bridge between legacy finance and the on-chain world. The rails are in place. The only question left is, when JP Morgan flips the switch and goes full custody, whose technology will they settle through? Fireblocks, Anchorage, or will they quietly tap Ripple's institutional custody infrastructure? Whoever controls settlement controls the future of money movement. That's the game being played right now. Even Larry Fink, the same man who once mocked Bitcoin as a criminal's tool, has flipped. He now calls it a digital alternative to gold. That's not just a change in tone, that's a signal. When the largest asset manager on Earth and the largest bank on Earth start aligning their language, you can bet the architecture underneath is already connected. They aren't experimenting anymore. They're integrating. The ETFs, the custodians, the liquidity corridors, it's all quietly syncing in real time. Meanwhile, retail traders are fighting over charts, but the institutions are thinking in trillions. Arthur Hayes and Tom Lee still believe Bitcoin's headed for 200 to 250,000 and Ethereum for 10 to 12,000 by year's end. But those are just surface numbers. The real story is in the plumbing beneath, because as JP Morgan tests custody and CME expands derivatives for XRP, the settlement architecture is being wired together. That's where Ripple lives. Of course, the moment the system starts aligning, the FUD machine goes into overdrive. Mark Yusko claimed recently that Ripple could crash the XRP price by selling its holdings, but that statement falls apart in 10 seconds. Ripple holds around 5 to 7 billion XRP, most of which it bought from the open market for liquidity. The remaining 35 billion is locked in escrow and can't be dumped even if they wanted to. Brad Garlinghouse's personal wealth isn't from a bag of tokens. It's from his equity stake in Ripple itself. If Ripple ever sold all its XRP, they'd destroy their own company overnight. No sane executive does that. So while retail panics, the institutions accumulate through uncertainty. People always ask me how I track these liquidity flows in real time, before the mainstream even reports them. Honestly, I use MEXC. Not because they pay me, they don't, but because their data lets me see where the liquidity corridors are opening before the news hits. You can literally see the volume spikes from institutional wallets. That's how you know when something's moving behind the scenes. There's a link in the description if you want to check it yourself. No pressure. Now zoom out. While JP Morgan is building crypto custody, Morgan Stanley's Global Investment Committee is quietly allowing its 16,000 financial advisors to allocate crypto exposure in multi-asset portfolios, $2 trillion in assets under management. A 4% allocation from that pool alone would inject more than $2.25 trillion in new capital into the crypto market. Combine that with the CME launching physically settled XRP and Solana options, contracts backed by real underlying assets, and you start to see the outline of institutional infrastructure forming in real time. Regulated options, real custody, and on-demand liquidity, all connecting together through the same pipes. And if you look even deeper, Ripple's technology is already fused into the financial veins of the world. Visa Direct, MasterCard Send, and American Express international payments, all quietly touched by Ripple's infrastructure. Lord Belgrave said it perfectly. Real change doesn't announce itself. It integrates silently. American Express's instant payment system, built on Ripple's blockchain platform. Visa and MasterCard have been experimenting with RippleNet as the bridge between tokenized assets and legacy clearing systems. It's not theoretical, it's happening now. While the rest of the market stares at daily charts, the largest financial institutions on Earth are rewiring how money moves globally. And XRP is sitting in the center of that new network. The question isn't whether banks will use crypto anymore. The only question left is which crypto they'll trust to move trillions. And based on everything we're seeing, that list just got very, very short. What most people still don't understand is that these institutional flows don't look like the old retail markets. They're silent, algorithmic, and deliberately disguised as volatility. Every flash dip, every liquidity wick you see on XRP isn't panic selling. It's calibration. When we saw that candle crash to $1.50 and then whip back over $2 in minutes, that wasn't chaos. That was volume being redistributed between custodians. When gold spikes above 4,000, bonds collapse, and XRP snaps violently. Those are not coincidences. That's the financial trinity sinking liquidity across rails faster than legacy settlement can process. This is how the machine breathes. Morgan Stanley's allocation model, CME's physically settled XRP options, JP Morgan's trading rails, they're all plugging into the same heartbeat. Whales aren't trying to manipulate the market, they're preparing it. They know the bridge can't carry institutional weight until it's stress tested. What looks like pain on a chart is just the system learning to handle size. The same way roads crack before they're repaved, these markets shake before they expand. You can already see the fingerprints. Exchange supply of XRP keeps falling, while custody wallets quietly grow. OTC desks are reporting larger block settlements moving in single transactions. Not hype trades, but strategic positioning. Pension funds and sovereign entities don't need headlines, they need throughput. They're buying silence and scalability. Every major liquidity event in history follows this same rhythm. Retail sees fear, institutions see inventory. The smartest money in the room always accumulates while narratives distract. When people are arguing about whether XRP is a security, the banks are negotiating counterparty credit lines. When influencers tweet about price, custodians are testing settlement speed. And every time retail panics, the ownership of the rails shifts one step further into institutional hands. You can feel the tempo changing now. The narrative isn't about speculation anymore. It's about infrastructure. Bitcoin can store value, gold can hedge it, bonds can yield it, but XRP moves it. Across continents, currencies, and now across the traditional financial system itself. That's the difference between a speculative asset and a liquidity instrument. One depends on hype, the other becomes a necessity. The whales know this. They're not betting on a price pump, they're betting on integration. Because once the system is stable, the repricing doesn't happen slowly. It happens in a single liquidity event when the rails go live, and every institution realizes they're holding too little exposure. That's why the smartest move isn't chasing green candles. It's holding conviction while the bridge is being built. Because when the noise fades and the structure is complete, you won't be watching XRP rise. You'll be watching it switch on. When you step back and really see what's unfolding, you realize this was never about speculation. It was about succession. The world isn't destroying the old financial system. It's upgrading it in real time. The liquidity architecture of tomorrow is being assembled behind closed doors, not in trading chats or Twitter threads, but inside boardrooms filled with people who used to laugh at crypto and now quietly build on it. Gold has always stored value. Bonds have always defined yield. But XRP has become the invisible current tying them together. That's why volatility doesn't scare the insiders. It confirms that the rails are alive. This isn't a market falling apart. It's a network powering up. The institutions don't make announcements when they're positioning. They move first, stay quiet, and let the public argue until the system is already switched over. You can see it happening. The liquidity corridors between banks, ETFs, and exchanges are being wired right now, and once they stabilize, there will be no buy signal. The repricing will already have occurred. This is the part that most retail never sees coming. They think the next bull run will look like the last one. Slow, emotional, social media driven. It won't. The next move won't be retail mania, it'll be a liquidity event, a silent revaluation that happens in the background while the world's largest financial engines reroute capital through rails built on RippleNet. That's why conviction matters more than timing, because when the system goes live, there won't be fireworks, there'll be silence. Gold, bonds, and XRP will flow together seamlessly, one representing value, one representing yield, and one carrying both across borders. And before we close, a quick reminder, When you like, comment, or share this video, it actually tells YouTube that this message matters. It helps push these updates to more XRP holders who still have no idea what's really unfolding behind the scenes. So if you want this content to keep reaching more people, that's the best way to support the channel. That's the new trinity of global finance, built in plain sight, hidden behind noise. And when the lights flicker on, people will call it overnight success. But the truth is, it was being constructed the entire time, right here, in front of anyone willing to see it. So stay patient, stay aware. Because when this switch flips, it won't ask for permission. It'll simply activate. And those already in position won't be chasing the move. They'll be part of it.